Right.
So, you know, we were talking about earlier, like kind of where the real estate market is now. I mean, can you kind of give a broad overview of how the market is in general all across the United States? And then also, guys, just so you know, you'll be able to call into the show 646. I don't know where the number went.
1 sec.
But yeah, you guys will be able to call into the show as well. We're gonna have a call on the show for you guys. So you guys, oh yeah, 646-490-0394. Again, that is 646-490-0394. So go ahead and get on the line if you guys want to go ahead and cut the line. You know what to do. fnfsuperchat.com. Cut the line. Rumble rant in, whatever it may be. And you know you can ask us questions. So yeah, man, if you could give a quick little, I guess, overview of the market where it stands now.
Yeah, you can kind of trace it back to 2010 when we had a crash. People got in, started buying real estate. There was all this talk of banks being too big to fail. The government introduces more currency into the economy through quantitative easing and growing the treasuries. What that does is it creates more money basically to change hands, which means real estate's going to do well because that money has to find a place to go.
Yeah.
We did it again during COVID. We printed a whole bunch more money to kind of mask the effects of how detrimental it was to shut down an entire economy for 9 months or whatever that was. So real estate's just been crushing it for a decade. You just couldn't do better. Around the time that Biden was trying to get reelected, the Fed increased interest rates very suddenly by a lot immediately and hasn't put them down. That had a detrimental effect on the economy, how often money changes hands, and definitely real estate in an attempt to try to keep prices from going up. So even though we haven't seen like an increase in home prices like we did, and we haven't seen a huge crash yet.
Like in 2020, it's crazy because the interest rates were so low.
And
like,
we had a ton of money everywhere.
yeah, and there's money, and people can get loans. So they're like, you know what? You're going to get a loan with a 2% interest. I can increase my home's price by $50,000, $100,000.
And there's so many people that want to buy it because where are you going to put your money? Inflation's eating any money you keep in the bank, so you have to invest it. It was either that or tech companies. Those are two things that did amazing. When they raised rates, it really screwed up the real estate industry a lot because, especially like the commercial sector, your properties are valued on how much they cash flow. Well, how much your interest rate is will affect the cash flows quite a bit. So it just turned it on its head, basically. And I kind of think that was a political thing where the Biden wanted to get reelected and he was very unpopular for inflation. So we just increased rates a lot to try to make him look better. And then obviously they had to replace him with Kamala and Trump was elected. And Trump has been trying to get rates down. And the current Fed doesn't want to do that.
Of course.
So real estate is just sort of stuck in this place where prices aren't crashing. They could. Prices aren't going up. But what has crashed that doesn't get talked about is the velocity of transactions is way down.
Absolutely, yeah.
So
People
even
don't
though
want to sell, bro.
no one wants to sell and no one wants to buy,
Yeah.
and insurance is way up, and taxes on properties are up, and what you got to pay a maintenance workers up because nobody wants to work blue collar jobs anymore,
Yeah.
and all the materials you got to buy are way up because of inflation. So you kind of have this carbon monoxide that's spread through the industry where rents can't go up because someone's getting raises at work, but expenses are going up on you, and you can't sell it because there's not a lot of people that want to buy it, and we're in a stalemate.
And you probably, if you did buy it during the early 2020s, you got it at a good rate. So you don't want to even refinance. You know what I mean? So, yeah, I mean, we've been stuck at like this weird 7 to 9% interest rate for the past several years now. So, and even me, like I've been able to really raise rents on my properties, even here in Miami. I've pretty much had to keep it at where it's at. So
For the first time, I'm seeing investors buy Bitcoin and gold instead of real estate now. Like, if they find a deal, of course, but it's hard to find a deal. So they go to gold and Bitcoin now instead of fully real estate like before.
I mean, people are trying to find something to put their money in.
Yeah.
I guess overall the entire economy, there's no easy answer like we had for the last 10 years. The problem was, how do I make more money? They're making money here. They're making money here. How do I learn all these things? What do I do? Now people are left without a lot of options. And you almost have to like restructure the entire economy. We're going to have to find a place for people to get back to work. We're going to have to find a way for people to invest money into something that's going to do well. And I don't know what that's going to be.
And I also want to be clear, we're not telling you guys not to invest in real estate, but what we are telling you guys is like, it's not going to be, you're not going to find an abundance of deals like you did 3 or 4 years ago. You know, you're going to have to look a lot harder. You're going to have to be really meticulous with the numbers because interest rates are higher, which means you don't make as much money on cash flow. Your cash on cash returns might not be at a certain place. I tell people shoot for 8, bare minimum to 10% cash on cash returns. What's your metric that you use?
If you're doing long-term rentals, residential, that's a good number that you can try to find.
8 to 10%, yeah.
That's thinking offensively. How much money can I make? Right.
Yeah.
I think in the future we're going to have to be thinking a whole lot more about how to keep your investment, like how to not lose it. because I'm worried about your tenants not being able to pay their rent because they all got laid off. And instead of having conversations about how we get a higher cash on cash return, we're going to be having conversations about how do I not go into foreclosure because there's nobody to pay rent on these properties, and how do I pay rent on my own property if I don't have a job?
Yeah, no, very true.
You mentioned jobs being lost with the current system coming, right? So to cover that, basically, you got people saying AI is the way to go. Obviously, learn AI. But that doesn't mean enough jobs are going to be available for people that have blue-collar jobs or want blue-collar jobs. What do you think is going to happen next with the marketplace? Because if you can't find a job, what do you do?
That's what I'm worried about overall.
Yeah.
And I don't know why it's not being talked about more, other than maybe people are afraid.
I think they are, yeah.
And so it's easier to talk about something happening in the Middle East right now that doesn't have anything to do with us, and you just keep your attention on those types of things instead of what you can do in your position. What it looks like is all the white-collar jobs are going to be lost first. You're just not going to need a bookkeeper. You're not going to need an accountant. AI and large language models are going to be able to do a lot of what smart human beings used to do. A lot of people in the medical industry are going to lose their jobs. They're probably all going to hit the job market at the same time. And if there's nowhere for them to go, they're going to be applying for unemployment. They're not going to be able to pay their mortgages. If your tenants work in those industries, they're not going to be able to pay their rents. I'm worried about this rush. Like, if you have all the houses hit the market at the same time for sale, the house values crash.
Yeah.
Well, if employees have the same problem, the labor market crashes. And since most of us own mortgages on our properties, we have to pay something. You don't own them free and clear. If everyone loses their jobs and there's nowhere for them to go, the real estate market's going to tank. The economy's going to tank. I guess I don't know how we prevent that from happening. At minimum, you're going to need a period of time to figure out where these people are going to work. That would probably be a period where things crash.
You know what scares me is more so than, let's say you pay your property off, right? You're about to retire. Maybe you lose your income, you lose some of your money from maybe issues that come up. But your property needs to be fixed. And you can't get the money to fix your property. You're going to lose it. Or you got to sell.
Mm-hmm.
But the problem is, selling now is almost possible because...
who's going to buy it?
Exactly.
Yeah.
So it's kind of like, at that point, what do you do to...
Because their interest rates are high. So they can't cash flow. That's the other reason, too, why it's hard to, like, sell. Because, you know, you want to sell, obviously you want to sell at a profit, and then, you know, they're buying it with an 8% interest rate as an investor. You know, they're not going to be able to cash flow like maybe 4 years ago where the interest rate was like 3%. They'd be like, oh, yeah, I'll do this deal all day.
Also, 1031s. You know, normally you can find a property like this, but to find another property in that same window, dude, it's kind of cooked, bro.
Yeah, you got what, a year?
6 months.
6 months. 6 months.
6 months to close, yeah.
So
it's kind of,
but it's not unique to real estate, right?
Yeah.
Like, real estate is like a buoy in the ocean. If the whole ocean's going to be disrupted,
this
is a bigger
asset
problem.
Classes, yeah. I mean, you know, crypto obviously we know is volatile. I still think real estate is the best asset class. It's just that it's harder to find deals now is the problem.
It's probably a better asset class than anything else. Like, the stock market would be just as likely to crash as real estate. If all these companies now, they lose their position because AI comes in and you have 2 or 3 winners out of what used to be 20 or 30 companies. Like, you don't stop anything from crashing. It's just going to be a massive change in how humanity does things and how you bring value to the market. We're going to have to navigate.
Wow, well said.
Again, guys, number to call into the show, 646-490-0394. We'll open it up to
Ready
you
to
guys.
connect. Click connect to show now.
So you guys can go ahead and, you know, get your questions in. When it
You are
comes
connected
to,
as
real
the
estate.
host.
Airbnb as well.
Welcome, host. You are now in the host room and can manage your callers from the call-in studio web interface.
Do they have to hear this?
Good to go?
Are we good now? Okay.
Smooth.
Sorry, guys. Yeah, that's the service that we use for it. So we're live now on it. So again, 646-490-0394. Dave's also an expert when it comes to Airbnb. Tell us a little bit about the Airbnb market. So we talked about residential real estate. What about Airbnbs?
Yeah, that's like hospitality, right? So you have 2 different basic categories of Airbnb or short-term rentals. The first would be just practical things, like your company says, hey, I need you to go to Columbus, Ohio, and I need you to live there for 3 months, or you're going to go visit your family out somewhere. You stay at a short-term rental instead of a hotel. The other more popular one is what we call vacation rentals. So you're going to go visit the beach in Fort Lauderdale, or you want to go out to Miami, or you're going to go to the mountains and stay in a cabin, and you want to go stay in somebody else's property in that area. Yeah. Those do very well when there's not a lot of them to compete with and people are traveling a lot. You can make really good money, but the downside or what you're giving up is you're going to be a lot more work into those. when the economy is bad, people aren't traveling and they're not taking vacations as often. And when everything you have is more expensive, you're way more likely to say, I'm just going to cut back and not take that vacation, or we're going to go somewhere for the weekend. We're not going to fly to a whole new area and go somewhere expensive. So short-term rentals take a very big hit. At the same time, they're not popular within the communities where you have them. Neighbors don't like short-term rentals. So like I ran into a lot of problem with mine that were actually here in South Florida because the neighbors that were there would call the city and complain saying, we don't want this property. And there's nothing they could do to stop me. The state of Florida allows it to happen. So the cities have to come up with creative ways to shut you down and stop you. So there's like a lot of...
Like they banned Airbnb in New York City altogether, right?
They changed laws that you can't do it a lot of the time. Same in California. That's like 30 days or more in almost every market. But if you bought that house planning...
so you can't even have an Airbnb... So people can't run an Airbnb for me for 30 days or more?
That's the only way that they can do it. It has to be for 30 days or longer.
Gotcha. Okay.
But what happened is a lot of investors bought properties, and then the laws changed.
Yeah.
Now what do? You got to sell it, but who's going to buy it from you? And they're definitely not going to pay the price you paid for it if they can't come in and rent it out. And there's a whole lot of people in the real estate space. It's kind of like, this is a weird example, but like you got in the ocean and the tide's like right here, and then it goes down to your feet real quick and you feel stupid, right? Like that happened in the real estate market where a lot of people entered in and they ran their numbers and they did their due diligence and they did what they were supposed to do. And then boom, the rules change, the economy shifts, everything changes. And now the investors are scrambling like, what do we do with this?
You know, this is why I always stayed away from Airbnbs. I know that they were like really popular years ago, and I saw a bunch of people making a lot of money on them, man. But dude, I always looked at it like, if I got to rely upon the vacation market to be strong to get cash flow, I was like, dude, fuck that. Like, because you can make money hand over fist, but
it's a job too, by the way.
When
you got to maintain cleaners, property. Like, dude, Airbnbs, bro. I had a friend who used to manage them as well, and people would say, "Oh, well, there was cockroaches in here, or it was a bad place," and then you get a full refund. I'm like, what the fuck?
They do. Everyone does that. It's like a game where they show up and they immediately start looking for something wrong with the house to hold it over your head, and they threaten a bad review if you don't discount their stay. And now there's like TikTok channels and YouTube channels teaching people
how to do it.
Yes. And you're exposed to that, like in the culture that we have, right? So Myron's strategy is definitely like a defensively sound way to look at it. I think the future of investing, you need to spend a lot more time thinking about the types of jobs in that area. If this is a blue collar town with like plumbers and drywall workers and city workers and sanitation engineers that are working there, they're going to be able to pay their rent.
Right.
But if it's like San Francisco, Austin, Texas, tech that can be replaced by AI and all those people lose their jobs, you could have bought the best property at the best price with the best cash flow, but there's no one to rent it from you.
So on record, there's actually a number that says people have lost 180,000 jobs in tech so far. And AI isn't even fully here.
Right.
So that's scary, bro.
Very scary.
And tech's supposed to be sound, a good career, a longevity to your success. But tech nowadays is like fly by night. It's not secure.
And that's just tech. What about when this hits the white collar jobs?
Cooked, bro. It's cooked, bro. I don't know any way out. Actually,